What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Digital World Acquisition Corp, ticker symbol DWAC, on a variety of time frames in anticipation of tomorrow's trading day, Friday, January 26th. Now, this name had been on an absolute tear. In the recent couple of days, we've seen a bit of a fade in the name, which is not entirely uncommon on big, massive short-term pumps like this. So let's take a look at this on a variety of time frames and lay out a bullish and potentially bearish couple of scenarios here. Before we do, guys, hey, if you wouldn't mind, this is a brand new channel. I'm doing daily uploads on this for the foreseeable future. I don't plan on stopping, so if you wouldn't mind, please subscribe to the channel if you get value out of these videos. Maybe even leave a like on the video. Helps out tremendously with the algorithm, and I appreciate it. Well, looking here at the 1 minute chart, we can get some micro context from the last couple of days, but I don't think this one is the best chart to represent what I think the real story is here. So let's move on and zoom out to the 5 minute. Again, we get a little bit more context looking here at the EMAs. That's the 50 period. Purple is the 20. Yellow is the 9 period EMA. Trading around those levels, actually doing so a little bit better yesterday. I'm sure there were a few bears that maybe caught some shorts off of these rejections off of the 20 period EMA. But again, I think we can get more context by zooming out a bit more here. This is the 30 minute chart. Now, the one thing that I find interesting about this chart is we saw back here on Tuesday, right? We had this 50 period here on the 30 minute. Now, again, the reason I'm utilizing the 50 and the 200 is not because, you know, from any follower mentality thinking they're magic or something. The reason I'm utilizing these on the majority of time frames is because my view on technical analysis is and always has been self-fulfilling prophecy. Now, that's neither good nor bad, right? It just is. So I want the indicators that have the absolute most eyeballs on them. That's the entire point. And that is going to be the 50 period, which is that white line, and the 200 period on basically any chart, especially 30 minutes and up. So with that said, you can see here that this 50 was getting sucked up toward 50. And last time we covered this name back on Tuesday, we were talking about 50 as a tremendously important psychological level. Now, we gave up 50. Of course, we see here on yesterday, early Wednesday morning, right? We gave up 50. That prompted us to give up the 50 period. And then we faded downside off of that basically all day yesterday. Now, today, we're getting suctioned kind of around that 200 period moving average, and there's clearly a lot of decision making going on around that area, which I find very intriguing. Let's look at the 4 hour here now, and we'll zoom into the more relevant time frame here on the 4 hour. We can see here there isn't a heck of a lot to gather from this particular chart. The one thing I will take note of here on the 4 hour chart is that the 50 period moving average here on the 4 hour is coming up toward 30. So I'm going to look at that as a potential area of resistance if the name does see continued downside, which we'll talk about more here in a second. Now let's zoom out to the daily. This is the 2-year daily chart, and then we'll zoom in to the more relevant time period here. There we are. Okay. Now you'll notice here when we get out to the daily chart that naturally the 200-day moving average gray is barely moving. The 50-day is barely moving because we haven't spent a lot of time since, you know, the stock was down under 20 bucks a share. And these on the daily chart, they take time to move. So listen, you bears, you know, don't shoot the messenger, right? You bears are probably looking at this, or at least bears out there, and they're salivating at the gap down to that nearest level on the daily, the nearest more relevant level, which is the 50-day moving average that's still down toward 20. Now, that's not anybody's fault, right? It just takes time to move these moving averages because they're daily moving averages, right? But I don't necessarily want the bears getting ahead of themselves, because let's backtrack now that we have the full picture, and there are two areas of interest moving forward that I'm paying close attention to. We have the 200 period and the 50 period on the 30 minute coming together, likely to form, you know, a tight channel here. We spent the last few days widened out, right? Which makes a lot of sense when you consider the fade off of that 50 period down for a swift test of the 200 period. That's very common in volatile stocks, by the way, to move quickly between channels like this. And now that they're coming together, this offers two very different scenarios, one bullish, one bearish, right? Now, first of all, the bears are looking at that daily chart and thinking there's nothing in the way. But we all need to look at all the time frames, not just the ones that confirm our bias, right? So looking here, the 200 period is clearly an area of interest for traders. I mean, look, the volume today was, it wasn't what it was 2 or 3 days ago, but it's not particularly low. We saw multiple 30-minute candles with over 1 million shares traded here today. So if you're a bull looking at this 30-minute chart here on DWAC, you're thinking one thing, right? Get back above the 50 period. Not only that, but first of all, hold the 200 period, right? Ideally. So hold above 35. Ideally get, above 37.50 or wherever these two stand tomorrow. And ideally start making a break back up toward 40, which was today's intraday high. And if you're bearish looking at this 30-minute chart on DWAC, it's even more simple for you. Break downside off of 200. Give up that 35 region. That's all you're thinking. Now, one more thing here on the 4-hour, okay? Bulls understand that as far as upside is concerned, I like to use the term open sky. That doesn't imply, right, inherent upside. What that implies is that there's not a lot of defined areas of resistance because we're kind of in somewhat of no man's land, right? At least recently, depending on what stock you're looking at. The only semi-defined regions, in my opinion, you're looking at like 40, that area, right? Somewhat of a psychological area and today's intraday high. But the most clear one is $50 a share. I mean, a huge psychological level. And, as of right now, that $50 a share is almost 40% away. Okay. Now, you bulls, you should also be aware, this 50 period moving average here on the 4-hour, right? Aside from that 200 period and $35 region on the 30-minute chart, that's kind of that next area to watch as that potential, that the most relevant, nearest potential kind of backstop, right? Here on the 4-hour. Now, bears, you're looking at that and, however you feel about that, that's almost a 20% move away, about 18%. But if you're bearish, you would ideally not only be looking for a break downside to hit that level, right around 30, also the 50 period. But ideally, if you're a bear on this name, you would want to see a break downside off of that because that may open up a test for $20 a share. At least that's what the bears would be thinking, right? But obviously, if you're a bull on this name, you're hoping it doesn't come to that. You're looking at this area here as a potential support area on the 4-hour chart. You're looking at this area here, getting back above there, ideally back above 40. And then in that case, you have 35, the 200 period, and the 50 period kind of at your disposal to utilize as backstops, right? And then 50 would be that next area in view. Now, let's zoom out here to the daily once again. I just want to share a mentality with you guys. Understand that if you're a bull right now, you're probably not, you're feeling semi-discouraged, but understand that the same way that this stock faded hard off of these highs, it made the upside momentum move, right? Whether it was the news, FOMO, whatever else. And that upside momentum move inevitably faded. The same psychological warfare and tricks are relevant also to the downside. When you see big, major volatile moves in either direction, the bigger and more aggressive that move gets, you tend to see not only profit taking from the positions that are benefiting from that particular move in that particular direction, but you also see reversion traders step in. It's very common. So in an incredibly simple way, right, the more volatile and the more a stock moves in your favor, the riskier that particular position gets. That's not only true to the long side, but it's also true to the short side. So psychologically, we have to keep that in mind as the stock pulls in here. I mean, you saw that, let's go off the intraday high here, right up close to $59 a share, seeing a 40% pullback in 2 days, right? That's not a small move by any means. But understand at the same time, this is the market, okay? And it doesn't have to do something just because you feel something is overextended. So as always, as you'll learn watching whether the Roensch Capital Show or this channel, Roensch Capital Charts, risk management is always number one. Take care of the downside, and the upside takes care of itself, okay? Let's look here at the implied volatility. If you're trading options, this is incredibly relevant to you right now. Just understand that it has faded below 200% now, but we're still at about 160%. Just recently, it was below 100%. So understand that if you're trading options in really any time frame in the last year or two, currently there is a bit of Vega value pumped into those. So whether you've benefited from that, buying them when IV was lower, or you bought them recently at the higher Vega value, implied volatility value, just understand that there is currently some elevated IV crush risk. Now, if you're selling options, it's actually to your benefit. Okay, so let's take a look now at what the options traders are actually thinking for today. You know, I'd like to see a larger sample size, but it's not tiny, but about 82,000 total contracts traded today. 47,700 calls, 34,162 puts, so a little bit weighted to the bullish side here on overall call put ratio. Now the delta 0 to 20, that's the short-term speculation data that we can pull here. 20,500 calls, 12,145 puts, also weighted to the bullish side. So we're getting not only the short-term speculators slightly weighted to the bullish side, right, that 0 to 20 delta range, but also the overall ratio. But, you know, we have to consider these are not large sample sizes. One trader could have come in and bought 10,000 calls and throws off this whole ratio, right? You know, the smaller a sample size gets, the smaller the volume in the chain is, the more of a grain of salt we have to take that data. Even, and this is the hard part, even if it very much so confirms our bias. Be real with yourself. If you find value in these videos or you like DWAC stock, please subscribe to the channel. I'll continue to produce the videos. Also, if you wouldn't mind, leave a quick like and or comment on the video. Helps out tremendously with the YouTube algorithm. I appreciate it, and I'll see you in the next one.